The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 15th wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely, folks, absolutely treasure your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool. You got to love this tool. This is the tool I call, it's better to praise than to criticize. I feel like saying, thank you, thank you, thank you. I mean, folks, I feel like saying thank you, thank you, thank you, you know, to this wonderful world of ours. My suggestion is that you should sing this song from time to time. It could be the perfect song lyrics when you really mean it, or when things are going great, or when you just simply feel like you're on top of the world. It might also be the right song lyrics to sing when you don't feel the words, or when things aren't going so great. Maybe, just maybe, it would be a good song to sing when it's difficult to see daylight. Maybe sometimes the acting as if will bring about the reality that each of us desire. Either way, folks, either way, these lyrics can leave you feeling better about yourself and your life. Always remember that praise is a powerful tool. Give it a shot today. Every single person from this point forward, for the rest of the day, every person that you come in contact with, begin the conversation with something that you praise about them. Just watch the result you get. You know, the sun shines, the flowers bloom, the bird sings. The birds sing. Clouds that form, dissolve, and praise, folks. Praise will begin that attitude of gratitude. Throughout the ages, the wise and the thoughtful among us have said that there is good in everything and everyone if we just take enough time to look. So today, find praise in everyone you come in contact. And you know what? Let that begin with yourself. What's something right now that you could praise about yourself at this very moment? I'll say, thank you, thank you, thank you. How about the markets? We know the bulls were praising the markets yesterday. Oh, my goodness, we saw the S&P close out at 1650.34. I'm pretty sure we were calling for a 1650 possible top out there. Composite was up 23 points yesterday. They closed at 34.62. Our call-in number is 877-927-6648. As we take a look at the futures market right now, futures off just a bit. You've got the Dow futures down 16 points, trading at 15,159. S&P futures trading off 3, out at 1644. NASDAQ futures off about 4 points, trading at 29.91. But what's it really all about? Well, let's start off. We don't normally start off this way, but I think we ought to start off by taking a look at the King dollar out here right now. We'll switch over to that chart. If you are listening to us on your radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can always catch the live stream of this show by going to the homepage of tfnn.com. What you will see is over on the upper right-hand side, you'll see a button with 3 smartphone devices. Click on that. This show will stream live, and as always, you can catch the archive of this show on TigerTV on Channel 9. Now, we're going to start off by taking a look at the U.S. dollar index here. This is the weekly chart of the U.S. dollar index, and we can see that it is now breaking above resistance. Again, it's a weekly chart. We're not even halfway through the week here, so the key is going to be, what does this chart look like come Friday? But right now, we've got the U.S. dollar index that actually is taking on the weekly swing point high from July 27th, 2012. That number, 84.25. So far, inter-session today, we've gotten up to 84.22. But really more important than the mere fact that it's breaking a horizontal line of resistance that goes back all the way to August 27th, 2010. By the way, during that time period, that was the announcement of QE2. So if you're wondering if the quantitative easings are having less impact on at least the U.S. dollar index, you can clearly say yes, because we're already back to the levels of where QE2 was announced. That's well off of the bottom down here that we saw back in May of 2011. That price point being 72.86. We're at 83.93 right now, and the market is getting ready, or the U.S. dollar index, I should say, is getting ready to take out a area of long-term resistance. But more important, perhaps more important, is where is the U.S. dollar index going to head to? Well, if you're watching us on Tiger TV, you're seeing a weekly 0.786 Gartley sell pattern. That Gartley sell pattern completed on the week of March 15th, 2013. Since that time period, the U.S. dollar index basically has been traveling sideways, hasn't been able to even make a significant retracement. By significant retracement, if we take a look at the retracement that did form so far, only a 0.382 retracement. That would be going from the swing point low here of this Gartley buy pattern, or Gartley sell pattern, I should say. That's the weekly low on September 14th. That's 78.60. If you go from that low all the way to the high that was put in on April 5th, 2013, 83.66. If you take your retracement ruler, 0.382 will give you a number of 81.73. Well, a couple weeks ago, we had the U.S. dollar index, the week of May 3rd, actually get down to 81.37. Just had a little dyslexia. Instead of it getting to 81.73, it got down to 81.37. But it found its way. It found its footing. Only a 0.382 retracement. Quite frankly, that sets up a very strong A to B equals CD. If we go draw that in on the chart here, if we were just simply drawing A to B equals CD pattern, it would look like this. And what it would tell us is not only would it head up to about the 86.11, that would be your 1-to-1 A to B equals CD, but more than likely 87.40 or 89.06. Well, where is it going to head to? Well, let's take a look. I'd say I'm shooting for the 89.06 mark here on the U.S. dollar index on the weekly chart. Now, as we know that when you have a failed 0.786 Gartley sell pattern, that is going to turn into a butterfly, just like a moth or just like a caterpillar getting into a cocoon and then finally breaking that and just simply turning into a beautiful butterfly. That's what's going to happen here with the U.S. dollar index. If we take a look at those butterfly expansions, now what we would do is we take a look at Fibonacci expansions of the high from July 27th. That would be 84.25. All the way down to the low that came in on September 14th, out at 78.60. The 1.27 mark is 85.78. The 80, it looks like about 87.73 is the 1.618. I suspect that where we're going to see the U.S. dollar index travel to is right around the $87 and change mark. And if it can make it all the way up there, it might as well go simply try to take on Mount Everest, and that would be the highs all the way back here to June 11th, 2010, out at that $89.10 mark. Now, what is that going to do? Well, what that's going to do is that's going to put a world of hurt on the commodities out there. To a certain extent, that should be good for you and I. And if we take a look at one of those commodities, well, we know it's going to be about the gold contract here right now, trading out at $14.1270, trading off only about $12 right now. So not a big deal, but what it is doing, what gold is doing here right now, getting ready to take on that swing point of April the 16th. The high is 14.0420. That's the number to keep in mind. If you see a close inside there today, and right now we've had gold trade as low as 14.0460, so we haven't seen the test of that 14.0420, only 40 cents away. Gold will get down there today. We'll see what kind of volume it has on the way down. What we're really looking for, what we'd really like to see, is we'd really like to see gold get down to 13.21. 50. You'd love to see it do that on less than 700,000 contracts. You'd love to see it close above that and just simply continue to test and test and test and put in a nice bottom here. However, with the U.S. dollar index heading north the way that it is, what really should happen is we should see gold head south. And where's that going to head to? Where is the southern region inside gold? Well, the southern region will most likely take us back into that 1270 area. Maybe it'll take us all the way back into the swing point from December 3rd of 2009. That level here, let me just switch over here. I should have had that written down. That level, December 3rd, 2009, 1227.50. So if the lows get broken out, 1321.50, what you should be looking for is a move to about 1227 to 1270. 1270, that's nothing more than that 265-point consolidation area that was broken. You know that we should expect a move equal to or greater than at least a consolidation area that it breaks through. That's what we've seen on chart after chart after chart. No reason to believe that we won't see that one here, with the exception that we do have this high volume bar that's going to be important for us to be watching inside the gold contract. But the U.S. dollar index clearly signaling it wants higher price. What else? Hi-ho silver. If we take a look at silver right now, silver is going to go down, and it may happen today here. It'll go test that $22 mark. Silver will give us some type of indication as to whether or not we're going to see an expansion inside gold. Remember, silver's great setup, could be a great setup, is going to be in that $17 range. On that weekly chart, that would be a nice 0.786 Gartley buy in the $17 range. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, we opened up starting off by taking a look at the king, and that means that we need to go take a look at the queen. So let's go look at the euro-US dollar currency pair. Right now we've got the daily chart up on my screen. This currency pair has been traveling in a sideways consolidation really ever since about the early April time frame. We'll call it April the 5th. So it had been traveling in a sideways consolidation for just over a month. That consolidation level was pierced on Friday. Some real follow through here. I'm sorry, today's Wednesday. On Monday was pierced on Monday. Some additional follow through yesterday or today that we are seeing. I'll get my days all straight here. It was actually pierced on Tuesday. Okay, let me get that. My apologies. So it was pierced on Tuesday as that consolidation level was broken. Some additional follow through so far this morning. We are looking at the daily chart. So what does that actually set up? Well, there's a little highlighted yellow box that shows you the consolidation level. I've got a smaller little box here. All that is the exact same measurement of the larger box. That says that the euro and the mother, the queen here, wants to head down and test the support levels. Well, a couple support levels. The first one it'll test is going to be the March 27th low right at the 1.2749 area. That will make a 100% move of a move. Just below that is what I'll call support level number 2. That'll take us back into the swing point from November 13th. 2012, right around the 1.2659 area. That is where the queen wants to head to. But if we do take a look at what's the retracement so far, if you're wondering why is it that the queen has stopped where it is here right now, well, it's pretty simple. Just take a look at your Fibonacci retracement numbers. Go from the swing point low that came in on April the 4th. That was 1.2743 all the way up to the high that was put in here. Nice little shooting star candle on May the 1st, on May Day. That high, 1.3241. That retracement, 0.786, is 1.2850. What do we have the queen get down to so far today? Just slightly under that at 1.2842. That's on the daily chart. We can see it's got room to run to the downside, neither overbought nor oversold. So on the daily chart, it has room to run. But if we go take a look at the EKG, what's going on the heartbeat right here using the 30-minute chart, what we will see is the queen here is truly in the oversold territory. Got down there. The most recent time was at 7 o'clock this morning. We actually saw a bullish engulfing candle form right here at 8:30 this morning. A little bit of follow through on that following session. That area is being tested here. So would not be unusual to actually see the euro get a little bounce here to work off that oversold condition before it moves its way down. So that's how you really put together a couple of different charts. You're taking a look at the larger chart. If you're trying to understand, hey, why did it stop where it stopped? Go down and take a look at more of an intraday chart here. I think a 30-day chart is just fine to be able to use to give you an idea, and then start looking around and saying, hey, are there any, in this case here with the market moving down, are there any bulls around? Where are the bulls trying to defend their position? How oversold is it in a intraday chart out there before it can go ahead and resume its move lower? So that is what is going on with the queen. If we go take a look at the futures markets, try to get a feel for what's going on inside the futures market, I would say right now it's going to be the NQ that we're going to be wanting to pay attention to. That is a little bit weaker than everything else. That is closest to the oversold territory. It's not there yet, so we can expect lower prices here as we come into the open this morning, as it has more room to run to the downside. It's made a 0.786 retracement coming off of the swing point low at 2:30 in the afternoon on May the 14th. That was yesterday. So from that price low, which was $29.84, all the way up to the high that was put in at about 1:30 this morning. So far, it's made a 0.786 retracement. Go ahead and remove those off of the screen here. If we take a look at the larger retracement, though, that would be coming in from 7 o'clock in the morning yesterday out at 29.71 and a quarter, all the way up to the highs that were put in the marketplace at 12:30. You can see at 29.84. That is sweet 618. That is where and that also make a little 100% move of a move coming back to that 2:30 time frame, to a 3:30 time frame yesterday afternoon out at 29.84. So that will be the first area where it will head. The second area would be moving all the way down and testing the 0.786 retracement. That would bring it down to about 29.78, and the 200 period exponential moving average right now also at 29.76. So the target range for the NQ here, and then you're going to want to. How about that? Then what we're going to do is pay attention and see as it moves its way into that oversold territory. Do we get a nice bullish bounce, or does it just simply start working sideways to work that condition off? If it starts working sideways and we don't get any significant bounce, folks, the top may be in. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 23 points. S&P down about almost 2. Composite flat. Russell 2000 off 2 points, and I did say it's going to be all about the NQ out here. We still have that up on my screen. The bulls showing up for work right as the bell sounded here. You've got a nice bullish, and now it's a 30-minute chart, so it's only the first 4 minutes of the session. But we can see that the bulls were at work. They were apparently right on time here. So you've got a nice bullish engulfing as well as a little bull sash candle out here inside the market. So that is that's a sign for the bulls to say thank you, thank you, thank you. And we'll continue to pay attention to that. But first, let's go take a look at some of these stocks here that are popping and dropping. And we got island reversal pattern. I'm pretty sure we got an island reversal. Let's go take a look at it. And it's going to be the leader in the clubhouse to the downside. And that is going to be X1, one of the 3D companies out here. Let's go see what they actually reported. I know they were out with numbers either after the bell last night or before this morning. Give me a moment here. We'll pull the chart up on the screen. Oh, yeah, it's a big island reversal out there. We'll see what kind of volume we've got to X1. XONE is the ticker symbol, down 14.5% this morning off $7 and change. Let me see here. They generated $7.9 million in revenue. Really not a big deal for a publicly held company. I mean, come on. 7.9 million, but anyway, that's what they did versus 2.7 million from the prior year, or for the prior year for Q1. So nice job there. Of course, they spent their way to those revenues. They had posted net loss of 1.2 million versus a net loss of 1.5 million from the same time period there. So generated, think about that, they generated another $4 million in revenues and spent that plus some. So they are certainly not being rewarded here this morning. Big, huge island reversal out here. Island reversal, folks, if we take a look at the trading session from April the 13th out here, gets up to a high of 45.50. Does that with some decent volume for this equity here, 882,000 shares. If you take a look at the session that it broke away from, that was 418,000 shares. So you like to see that. And what does it do yesterday? Gaps up again and does it with some volume, 1.5 million shares. But now we've got a breakaway to the downside, creating an island out here. And, folks, it is an island here where it's now abandoned both of these candle sessions. It's now abandoned the May 13th level as well, that low. 43.31 so far intraday here. The high is 42.60. So you got a big old island reversal. What does that set up? You know what it sets up, folks? Sets up that X1 can most certainly come all the way back down and test out the lows from February 7th. It's an IPO. This is an IPO going from April the 7th. It completed yesterday a 1 to 1.272. A to B equals CD up. And the danger sign here is that we've already had 660,000 shares come out of it. Remember, yesterday's high was with 1.5 million shares. So you got big old island top reversal here, and with volume to the downside. That was on X1. Let's go take a look at Apple. Apple getting hit hard here this morning. Well, we'll go see if it's getting hit hard here from a volume standpoint. So let's go take a look at Apple. We'll pull that chart up here momentarily. That is trading looks like it may have a slight gap. Let's see if it does. Yesterday's low out here was a price point of 442.15. The high so far today, 441. So we got a little gap out here in Apple. Volume-wise, yesterday was not really too bad. Nearly 16 million shares. That was going against a little breakout session from April 30th with 24 million shares. The prior session, 22 million shares out there. Apple should come down and at least test the high of April 24th. That's got 34 million shares. That was really the first sign of strength off of the bottom. If we take a look at retracement levels now, we'll come off of the low from April 19th. That was a 385.10 mark, all the way up to the high that was put in. Looks like May 7th. We'll use the May 7th high, 465.75. You can see we're really right at the dead cat bounce area at 434.94. And 415.91 would be the logical area. That would be sweet 618. And, of course, at 415.91, that gets you close enough to go test 415 and a quarter out there. And that's at April 24th level with 34 million shares. Apple starts coming down with volume exceeding 34 million shares. What it will do is it'll go test out the lows. Now, that might actually set up a really nice trade, either direction. And that's the cool thing. We'll go ahead and we'll put the chart up on my screen here in a moment. We've got the Apple chart. I'm going to put the monthly chart up on my screen to show you why it would be cool if it came all the way back down to that bottom. And then you could make a trade going in either direction depending on the information or the news that it goes ahead and gives to us. But if we go take a look at an even ultra short-term chart, let's take a look at the 5-minute chart on this, see what kind of volume that we have here. You had big volume come out of this equity right about 155 yesterday. That volume was 871,000 contracts or shares. We hadn't seen that type of volume to the downside really for quite some time out here. In fact, right now, what that was really trading down into was this high-volume bar at around 9:30 or so in the morning on May Day, on May the 1st out there. So you had some volume. We're also seeing some volume here in this early portion of the trading session here. At the open, we saw another million shares just about, and 870,000 shares as we just came into this 8:40 a.m. time frame. Now, that's on the 5-minute chart. If we go take a look at that monthly chart is a beautiful thing here. Why? Because as we know, we were taking a look at the daily chart. We have that 1-to-1 A to B equals CD down. That A point, even on the monthly chart, you would use the high of, September 30th, the month of September 30th, I should say, 705.07. Your B point would be the low of the month of November 30th, 2012, 505.75. That'll take us up. Really, you could use the high of November 30th as well at 603 as your C point. I'm using the candle right next to it. Just looks a little bit easier. What we do have is we had a 1-to-1 A to B equals CD that completed, and as it completed, coming into last month, what it formed here was a hammer candle. Now, in this current month here, you get a close below the open, which would be 441.90. We're a long way. We got half of the month to go here. But as we took a look at the daily chart, we might get this test sooner than later, and the test that you're looking for again is at 385.10. Now, if you only paid attention to the daily chart, and the daily chart here shows at that 385.10 level, the 21 million shares down there. If you got a test of the day on the daily at 385.10, say penny 2 or 5, I don't care how many dollars below that, and then you get a close above 385.10 on less than 21 million shares on the daily chart, that would be a buy signal. On the monthly chart, though, if you hadn't looked at the monthly chart, you wouldn't know, boy, you should have a lot of bullish friends down there because that was a hammer candle. That's where your back is up against the wall, and that's where you could take a trade. Likewise, you close below 385.10. You break a hammer candle on the monthly chart, folks, and that absolutely spells out $317 in the as far as lower price for Apple out there. That would be nothing more than a point. Well, let me see what that actually is out here. Let me make sure I get the right number here because that might not have been it. Let me actually go off of the lows here from 2009 all the way up to the highs that were put in. Yep, okay, so that is good. So 317, just want to make sure I had the right there, 317. That number, folks, nothing more than a 0.618 retracement. And what we can see is Apple is below that or of 382. And when you get below one area or above an area on a retracement level, you will typically go to that next level. So we know where the bulls are hanging out inside Apple. You know the test. And, you get a break of 385.10, the move to 317. That would be a nice move to the downside. Likewise, you get a test of 385.10 on the daily. We know it would be a test on the monthly, and that area holds. You can certainly take a bullish position. If it closes below, you just simply reverse. You close out your trade. You just simply jump to the short side out there. So that is a nice little trade setup with inside Apple, using a monthly, using a daily. It's why we go ahead and we use the intraday charts as well, just to check out the EKG of the market. Let's go see how those bulls are doing inside the NASDAQ futures. Speaking of taking a look at a intraday chart out here, and so we're taking a look, and so the bears showed up for work right at the price level of 3,000, even Steven out there. And so we've got the fight between the bulls and the bears. On the NASDAQ here, we can see the NQ30. We can see how price here this morning, again for a third session, is the third time a charm out here. This is the third time we've seen the NASDAQ break the low of the rising price channel. Yesterday when we were taking a look at it as we were coming into the trading session at 10 a.m., we had price move back inside the rising price channel here. We can see that bar. That's where my cursor is hovering. We saw that same pattern set up coming into the 10 o'clock time frame, 10:30, back on Monday as well. So, we've got another 15 minutes before the 10 o'clock session. But right now, what we are seeing, and still a bullish engulfing candle as we speak, as long as you get a close above the open of the 9:30 session here. That open would be 29.93. You'll have a bullish engulfing candle. You get a close below that, well, then it could be a piercing candle or what have you, but it loses its strength out there. And what we can see price has actually done is gone up and tested and is trying to get back into that rising price channel. So we'll come back and we'll take a look at it. If not during the end of this show, certainly we'll look at that during the Money Masters show. Let's go take a look at some of the other things here popping and dropping in the marketplace. We did have Deere out with earnings. John Deere, Deere and Company, I suppose. DE is the ticker symbol. Let's go see what kind of numbers they reported here. They generated earnings of $1.08 billion versus $1.056 billion. So nice numbers there, but the stock must be guiding lower. I don't see the actual any other numbers here, but the stock is trading off 4% this morning. So let's go take a look at it. DE is the ticker symbol here, and let's go see what kind of volume we've got coming out of this thing, and see if this was out near its highs. And it most certainly was. So here's another equity with volume off of the highs. Let me get rid of some of the things on the chart here. There we go. We'll just start from a fresh little chart here as we take a look at it. So yesterday, this gets up into the price level of 93.88, 3.6 million shares. It was taking on a downdraft that comes all the way back here. In fact, it did take on that downdraft from February 13th that had 8 million shares to the downside. So it gets all the way back to where it broke down. And what does it do today? Breaks down again. Volume-wise so far, 2.2 million shares to the downside. So we're seeing some more volume off of the top. You saw institutional selling inside Deere right here on February the 13th. We talk about sometimes the market will give you 2 or 3 chances to get out. Well, here was the first chance back in March, the middle of March. Price gets back up into about the center of the bar of February the 13th. The low was 90.52. The high was 93.90. Back here in the middle of March, gets up to 92.50. What does it do here yesterday? Gets all the way back up to where we saw that institutional selling, and we are seeing it again today, and you're seeing it in even larger quantity, most likely than what we saw on February 13th with 8 million shares to the downside. So that is on Deere. Deere should head all the way down now to the swing point low of April 17th, that area 81.58 out there in the marketplace. If we go take a look at, let's go peek in on Google, because that is pushing the NASDAQ higher. That's up $16 and a change out here. So let's go take a look at Google, see what it is doing. Google taking its place back from Apple as a true leader in the marketplace. So let's go take a look at Google. It is out at new all-time highs out here. So this is, this is coming off of that earnings report that was on, I think it was on April the 29th out here. So just it's got a nice A to B equals CD. Looks like Google wants to get up into the 909 area. That'll be a 1 to 2 A to B equals CD pattern out here. It is moving above a 1.618 butterfly pattern. That really completed, well, that was the open here this morning, 895.13. So strength-wise, yesterday inside Google, 1.5 million shares. So far today, it's got even more strength. 600,000 shares inside Google. Of course, nowhere near the volume that it had back up at these swing point highs back in March, but nonetheless, it is moving higher. Looks like the next stop for Google right around the 910 level, perhaps even all the way up to about maybe 945 on this thing. But this is quite a freight train here. Let's do this. You see, I've got if you're watching on Tiger TV, I've got all the earnings reports. I just simply forgot to notate the last one, but I'll do that. I'll do that in a bit here. If we just take a look at large retracements out here, 883, well, we're above that. That was the 1.272. That was the expansion that I was looking at, folks, going back to its highs in 2007 all the way to lows in 2009. So it's above that. That says at the 1.618 level, that's $1,056 maybe on the horizon here for Google over the next few months or so. Right now we've got the Dow trading off 28 points. S&P down 3. Let's go peek in on Goldilocks and silver. Not a lot changed out there. Gold trading at $14.14. Silver at $22.95. We'll be right back.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow down 18 points right now to the upside. Google leading the charge, and right behind them is Netflix. Netflix up 4% today, up $10 and change. We've got that up on my screen here, trading out at 243.50. We've got the weekly chart on my screen. On the weekly chart, we can see truly in the overbought territory, but momentum. I've got the 4 moving average indicators out on my screen. That's the 8, the 21, the 50, and the 200, and they're all lined up for this to continue its move higher. What Netflix also has done here on the weekly chart, took out a B point of an A to B equals CD up. This is a large one. That B point was February 22nd, 2013. 20 million shares were traded at that B point, and that was taken out with 42 million shares the week of April the 26th, 2013. At a minimum, what Netflix wants to do, believe it or not, is move all the way back up to its highs back in July of 2011. It'll make a 100% move of a move. That's in the 304.79 level. That's the high. The low is 281.62. That is where she is headed to. It's up over areas of resistance from different downdrafts that it experienced when it sold off, and quite a move off of the lows at $53 out there right now. And those were lows that came in, less than a year ago, September 28th, 2012 out there. So no bear sightings out here really on the weekly charts. Well, you saw the little dark cloud cover right here on February 22nd. That was the week of February 22nd. That was erased the following week. We then did see a little bearish engulfing candle right here the week of April the 5th. But, boy, that got wiped out by this big old bear sash candle right here. And that's the one that took out the B point of an A to B equals CD up. So that is on the weekly chart. We've also got LinkedIn participating this morning. Let's go check in on that stock chart. We know that's got a island reversal top as well. LNKD out here. Must be on my earnings charts, but let's just go put it here on my show charts. We want to go show tunes. We want to go ahead and keep LinkedIn and pay attention to that island reversal. So it's trying to go rescue some of its stranded passengers here. So it is taking on and getting up over the downdraft session from May 3rd, at least so far. That high is 187.75. You're at 188.81. Volume to the downside. Institutional selling 11.7 million shares. Today it's up with 579. Big island reversal up here. If it can close inside that, it'll go ahead and negate that pattern. But so far, that is what we have in place here, and that's up at that high from May the 2nd. The low there, 196.43. That's on LinkedIn. You've got Solar City to the upside. Eagle Materials, EXP. They were out with numbers either after the bell or before the bell this morning. Their numbers go like this. Revenue, $159 million versus $116. Earnings of $7.8 million versus $9. EXP is the ticker symbol. So let's go see what they actually are doing or what it's trading into. Again, EXP. Not to be confused with ELP, a great band out there, Emerson, Lake, and Palmer, one of my favorite groups, and that is taking on its most recent swing points from March the 13th. That has 1.2 million shares so far today, 376,000 shares, so this is getting up to new highs. Let's put this on a weekly chart here real quickly. That is on EXP, and it is completing a 100% move going back to the highs from April of 2006 out there. And those highs were right about 74.55. You're just trading slightly underneath it. Folks, if you're off to start your day, have a wonderful Wednesday. And always remember, you have an amazing power within yourself. And that power is so strong, you will create a life of abundance. You'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.